Hi, before watching this video, I just want to clarify that my assumption is that you have already watched the guide in investing in mutual funds because I have discussed the basic concepts there. No. So this video is intended to give you an idea about the low risk fund options we have in mutual funds. First, let me give you a summary of the risk classifications to better guide you in choosing the right fund option for your investment. I categorize the risk classifications into very low, low, moderate, and aggressive. For time horizon, let's say we would consider short term if your time horizon is 1 to 3 years, medium term 4 to 7, medium to long term about 8 to 10 years, and long term would be above 10 years. Now, let's move on to the investment objective. Okay. So first, what does preserve capital mean? In order to explain it, let me compare to you investing in a bank versus investing in mutual funds. Okay. When you put your money in the bank, let's say you deposited 10,000 pesos today, you can be sure that after a day, after a week, after a month, after a year, or 10 years after, your 10,000 is still 10,000 with a little interest with it. Okay. So investing in a bank, putting your money in a bank, the risk is very low. So it means you preserve your capital if you place it in a low risk investment type like a bond, like a bank. Okay. While as in mutual funds, there is risk involved. If you invest your 10,000 today, its value will be different tomorrow. In fact, it changes every day. Okay. There are ups and downs in the value of your investment depending on the market factors that affects the investments. So let's say, for example, your investment objective is to preserve your capital, meaning you don't want to sustain losses with your investment. So it is best to put it in a type of investment with low risk like a bank or other types similar to a bank, similar to a low risk classification like a bank is, because you don't want to lose a portion of the value of your money at any given time. Okay, so that is what you mean with preserving your capital. Okay, you don't want its value to move, especially to sustain a loss. Okay, let's move on to the investment objective of preserving capital and earn some income. Okay, take note, like a bank, the interest being earned by your money is very low. Right now, a savings account would only give you 0.25% in a year. Okay? 0.25 means your money is earning, let's say you deposited 10,000. So your 10,000 will earn 25 pesos for 1 year. So in investments, there are trade-offs. If you're not willing to risk your money, then you can only expect a low return on it, and vice versa. So this is an example. You want a low risk, then you can only expect to earn 25 pesos with your 10,000 in 1 year. What if your objective is you want to preserve your capital, but you also want to earn some income in a way? Okay. you want to earn more than 20, you want your 10,000 to earn more than 25 pesos in a year. Okay, so if that's the case, meaning at this point, you're willing to risk a little more, okay, than the first objective. So that is why this is ideal for uh, those who are willing to take a little risk, okay, or low risk, okay. So that is what this investment objective means, okay. You still want it to be some kind of a low risk, but something that will give you a little higher income than this previous option can provide you, okay. So let's move on to the next. For the next investment objective, you want to earn income and grow your capital. Let's, in investments, when we refer to the word income, we usually mean it's a fixed interest, just like a loan provides. For example, you loaned money from a bank for a certain purpose. So the bank is earning a fixed interest from you. Okay, so that is what we refer usually with the word or the term income. It refers to a fixed interest, meaning your money is invested in an interest earning security like a bond fund. Now, if you remember, I mentioned in the investing in mutual funds guide that investing in bonds is like lending money. Okay. And in return, the issuing party will be paying you interest for your money, okay, for the term of the bond. Whereas in investments, when we say capital or growth, okay, we refer to your principal money, meaning the money you invested, as growing or appreciating in value, meaning it increases in value. Similar to a business owner who established a business and earn income from the business that he put up. Because when you say you grow your capital, you can achieve that if you invest your money in equities, or meaning, in other words, you are also investing in businesses. And your money will grow or appreciate if the businesses that you invested into become successful or earn return from their respective investments or capital that they put in that business venture. Okay, so meaning this investment objective, to achieve this, you would be investing in both bonds or fixed income securities and equities, where mainly you will be invested in businesses or companies. For the last investment objective, your goal is to maximize return, meaning your risk appetite is very aggressive. You are willing to take risks for your money. Okay? So in this case, the ideal fund option for you are high risk investments, which is equities. Again, we already discussed in the investing in mutual fund guide why investing in equities is considered high risk. All right? Again, so why do investing in equities would potentially provide the highest return? Because the amount of money that you can earn in doing this does not have any limit. Okay? As long as the companies you invested to are performing well, okay, and that is the main purpose of businesses, then you can expect that the money you invested in their companies would also appreciate like the businesses you invested in. Now, let me show you the relationship between the risk and the returns that types of investments could give you. Remember the general rule in investments, which is the higher the risk, the higher the potential return you can earn. Okay? So with that general rule, the very low risk fund option also gave you a low return compared to the other options. Okay? So in these returns are the best returns that this fund, the fund options per risk classification has provided since the inception of the fund. Again, I took these numbers from our historical best. This is the best returns that our respective funds has earned since the fund has started. Okay. So originally I plan to use 1 year returns, but because of different market factors, a short-term return would not give you the right picture. Okay, so that's why I decided to use the best historical returns, because this is taken from a long-term point of view. All right. Okay. So both the low risk classifications gave the lowest returns among all the options. Okay. While the moderate risk classification funds gave also the average return among all the options. And the most aggressive fund options gave the highest, best historical return of 69%. Okay. Again, based on the long-term data, the general rule, the higher the risk, the higher return, and vice versa, prevails. Okay. Our actual returns shows just that. Now, let's move on to the low-risk fund options. I have shared you this video because your risk profiling resulted to a low-risk classification, meaning you are a conservative investor. You don't want volatility in your investment. You want to preserve your capital as much as possible. Okay, so under the low-risk option, you have 3 options. First is the Peso Starter Fund, or in other words, this is our money market fund. Okay, money market fund in nature are very short-term securities. Usually, the term is for 1 year and below only. And short-term time deposits, savings account are an example in this category. For the year 2021, our Peso Starter Fund earned 1.48% in 1 year. But our 10-year return is 16%, meaning your 100,000 became 116,000 after 10 years. Okay. Next option is government securities. Now, this fund option exclusively invests in government bonds only. Okay. For the year 2021, it performed negative 1.61%. But our 10-year return is 23%, meaning your 100,000 became 123,000 after 10 years. And the last low-risk fund option is the bond fund. The main difference of these two is that this option includes corporate bonds. So our bond fund invests in both government-issued and corporate-issued bonds. But we usually only invest in corporations of good standing like Petron, etc. Okay. So for the bond fund, our 2021 one-year return is negative 0.76, but our 10-year return is 32%, meaning your 100,000 will become or became 132,000 after 10 years. But take note, this is a historical return. This is a past performance. It does not suggest or even forecast that it will perform the same for the next 10 years, for example. Okay? We stick to the theories that we learned in the Investing in Mutual Funds guide. Again, based on your risk profile, the fund option best for you is the low risk types, and you have 3 options under it. No, you may just choose one, no, like invest all your money, let's say, in bond funds, okay, 100%. Or you may also get a mix. Okay, let's say, for example, you will invest 20% in peso starter, 20 in government securities, and 60% in bonds. You can also do that. Okay, so just let me know your final choice. Okay, if ever you have questions, just let me know. Just message me. Okay, thank you. Bye-bye.